Alright, welcome guys to today's section. So in this video I'm going to be showing you how to identify market structures, how to map out your market structures and combine it with other price action methods. So I trade price action basically, but then I come to understand that when you cannot trade price action effectively if you do not know what supply and demand is all about, how to identify it correctly in the market. So in this video right now I'm going to be showing us exactly how to identify supply and demand zones, market structure, and then also combine it with a trend line and other factors that you already know in price action. So first of all, you start from higher time frame. And we are on 8 hours on this V25 pair. So what do we do first? What we do is that first of all we map out the structures. These are the structures. So this is the first high. Let's duplicate it. This is the second lower high. Okay, this is the third lower high. This is the last lower low. Okay, so as we already know, these are the lower lows. Okay, these are the lower lows. So how do we know that this is a downtrend? So this market has been bearish from here, broke this low to this point, made a high, broke that low, and so on and so forth. So but now we notice something, that this market is now price is beginning to change trend. At this point price changed trend. You see, it broke this high. Immediately this high was broken, we already know that the trend has changed. As you can see, this price reversed, got to somewhere here, sold, formed a lower low, and then broke the previous high that it formed and broke the last high here. So when it broke this last high here, you know that when it broke this high, we know that price has changed trend. Price has changed trend at this point that this high was broken. Okay, so after it broke, okay, so this structure has been broken. Okay, and now we wait for a reversal. Now at this point I'm going to be combining it with the normal price action trend lines that we use. So basically when it's coming back, what we'll do is that we use Fibonacci. Okay, first of all, use our trend line. See our trend line. The first low was formed. The second one formed. Use the first low. You see, this is the first low, the second low. Now the third low has formed. You see, 3 touches confirms it that this is going to buy. Okay, so now we will check it with our Fibonacci. Fibonacci retracement is used to identify retracement zones. Retracement zones where price is possibly going to reverse from. Now this price reversed to 61.8. and that's 1.8 was where it touched the trend line. You see, line. So this is 1.8. This is a zone, and this is a zone, a valid zone. You see, so this touch is valid, very much valid. Okay, supply and demand zones, just like we mapped out those structures at first when the price was still bearish. Okay, these structures that we mapped out. Okay, supply zone is where price will get back. So that's just explanation, you can give to even a 10-year-old and they will understand it. So what it means is that anywhere price gets to and sells is a supply zone. Anywhere price gets to and buys the price. So all these points now where the price sold are all supply zones. See, so now this place now that this price got to is also a demand zone. You know why it is demand zone? How you know demand zone is that you see a cluster. There are two demand zones in this bullish trend. Here, number one, here is a demand zone. See, this place is a demand zone, and this place also is a demand zone. This is one, this is two demand zone. So this one now, price has gotten to it. The reason why I chose this one is because it tallied with 61.8 Fibonacci retracement level. So that's why I choose it to be my valid demand zone. But if anything makes it break here, then the next place you should expect it is here. Okay, now when price is bullish, supply zones can only hold if that supply zone is very strong and it has to hold from higher time frame. So now we are still on higher time frame. Now let's go to lower time frame. Let's go to 1 hour. Go to 1 hour. Now when we go to 1 hour, you can see what price has done. See, price seems to be bearish on 1 hour time frame. Why? Because let's use trend line to show it. See, now this is to tell you that this bearish move is just for retracement. It happened because price was retracing and it has gotten to this demand zone. You can see the sweep that happened there. Okay, now very good. So now we have to wait for, we have to look for entry. Let's say you missed the first entry. Okay, let's say you missed the first entry. Obviously you have to wait for this sweep to happen and move up. Now we need to wait for another entry. So our possible entries now will be, the second one should be here. If and only if price will come back here, wait for it here. Okay, wait for price there. Okay, so let's wait for price to come back here, and if price doesn't come back here, that's up to it. Now you can see here also it's forming a cluster here. It has formed a cluster here, from the cluster at this supply zone. So he wants to turn this supply zone now to demand zone, because a supply zone can be turned into a demand zone, and a demand zone can be turned into a supply zone. So that's in price action we call it resistance forming support, and support forming resistance. Okay, now we have to wait for price to come back to this demand zone, and if it comes, it will be nice, because we'll be heading towards, we'll be clearing this. Your first TP anyway should be the next supply zone here, this place. That's about 1:7 or 1:8. Okay, risk to reward ratio. Now your next TP should be here. Okay, your TP2 should be here, and your TP3 should now be here, the next supply zone. So you can see your stop loss should be below that demand zone. You see this box, rectangle box, blue rectangle box is a demand zone, because it gave a support that broke this high. Okay, so my system is running low. Now I'll be rounding off this class. So thank you guys for watching. Do well to subscribe and follow this channel. Thank you.